Well, thank you. And without further ado, I'll hand over to Al to introduce the other participants and kick things off.
Thank you, Tim. And welcome everyone to today's Capital Markets Day. I really appreciate the overwhelming sort of support and attendance and interest in the business from all of our shareholders and potentially new shareholders that are attending today's session. After that catchy little jingle about IR 4.0, the Industrial Revolution, we have put together, I think, a really good program of our really important companies that are new to the Tern investors, in that they have not presented before, and the exciting CEOs, the dynamic CEOs running those businesses. So you'll hear from them today as they are impacting the areas of IoT that have to deal with data, communications, and the idea of automation, as you saw in the video. So I think without further ado, I'd like to introduce Gareth Evans from Progressive Research, who will provide you all with an update and a view on the IoT market and give you some use examples of what's happening that we believe is the dynamic opportunities for us to create value and deliver value to you all, our shareholders. So with that, Gareth, please introduce yourself and let's move on with the agenda.
Okay, as Al said, my name is Gareth Evans. I've been a technology research analyst for give or take 20 years, and I've been working with Tern as a client of Progressive Equity Research for the last 2 or so years. So it's a real pleasure to be invited back to speak at this Capital Markets Day. This is actually the second CMD at which Tern have asked me to speak. The first one was just under a couple of years ago, and that was face-to-face, so with live investors in a real room. So that was a real pleasure. And it's great to be speaking to you again, albeit remotely, and hopefully one of these years we'll get back to a more normal setting where we can see each other face to face and have a more proper conversation. But Al and Sarah have asked me today to provide a high-level overview or a run-through of IoT, what it's about, and a number of the interesting areas. And so I thought I'd start off the presentation just by giving a quick overview of what I'm planning to say, really talking through the IoT at the highest level, or a bit of a definition and a market overview, then talking about a couple of comments that we've heard from some of the biggest players in the industry at an event where Al presented a couple of weeks back, then narrowing it right down to some very specific end user use cases, using a couple of Tern's investees as examples for that part of the presentation, and then finishing up talking about Tern itself, how it operates, how it's a bit different, and in particular what we've seen over recent quarters and what we'd expect over coming weeks and months. So that's the agenda for the next 10 or 15 minutes or so. I thought I'd start with the definitions, traditional in these sorts of events to do that. If you look on the internet, you'll find a very large number of different definitions of the Internet of Things, or IoT. In fact, there were so many different definitions, I thought there was no particular harm in adding one more. So I've come up with my own. You'll see it here. I think the Internet of Things is really about a number of connected devices working together for an organization to achieve some kind of goal or deliver some kind of task. Normally, that involves a potentially large number of in-field or on-site devices gathering and harvesting data, bringing data together, and that's then collated and drawn away to generally some kind of central or cloud-based platform where that information is stored, is analyzed, and actions or decisions are taken based on that data. And those decisions then sometimes are acted on separately, and sometimes those actions percolate back through the Internet of Things into the real world, and real life things change because of the IoT activity. So that's what I think the IoT is all about. Key questions clearly relate to the scale of that market, how much there is, and also the scope for growth, how much opportunity there is for that market to grow. There are a number of several billion devices, depending on how you define it. There are several billion devices already connected. Each person's smartphone around the world is the most obvious or ubiquitous device. But in addition to that, there are billions and billions of other much smaller devices, microcontrollers or processors or sensors, all of which can or should be connected into this great web of Internet of Things to derive value or deliver value for shareholders or organizations or individuals as we go about living our daily lives. That growth or that existing scale will be driven in terms of growth by a number of factors, most notably Moore's law and the ongoing improvement and acceleration of processing power as time goes by, and in particular, the reduction in pricing. A lot of these components are shared with, they're common to consumer telephony, telecoms products or radio chips. So those prices are coming down and down as those markets grow and grow, and that will help the IoT growth and the expansion of the addressable market. And connectivity itself is getting cheaper. The price of moving a piece of data from A to B is coming down dramatically. 5G networks will make that even faster and easier to achieve, and at lower and lower prices as time goes on. So there's some really, really good drivers for this Internet of Things market. A couple of specific areas within the IoT market, which I think are particularly exciting areas. The industrial side, they call it the industrial Internet of Things, mainly around factories or process plant machinery, either in one large location or spread disparately across the world or across a country. And then the medical things, IOMT, the Internet of Medical Things to do with healthcare. Both of those, although the acronyms are built differently in a slightly confusing way, there are a couple of things that they share in terms of the importance of data and the large amounts of data which need to be sent back and forth, either across a factory setting or an industrial platform, or medical patient data, super high levels of significantly heavy information-rich data flying around the internet. The other aspect is security. If you've got that level of data with those important things, you've got to be very, very sure that that's securely managed. And that'll be a theme which I'll talk about 2 or 3 times as we go through this deck, because security is increasingly important within the IoT landscape. So, as I said, the next thing I'm going to do is talk about the perspective of a couple of very large businesses. Al gave a presentation 3 or 4 weeks ago at a Liberum investment bank investment event with professional investors. There are about 60 individuals, I think, from 30 or so different institutions on that call, on that presentation. And I was alongside a couple of the absolute industry heavyweights, Infineon Technologies, 40 billion euro market cap business, heavily involved in the automotive space, but with an increasing presence in IoT, and also Imagination Technologies. It was previously active in the UK stock market, now in private hands, but it's again a significant business with a very, very strong position in the global market for GPUs, graphic processing units. And they also have a strong position in IoT. So it was great to get some comments from those significant players and to see Al describe the Tern proposition alongside those. And even better, it gives me the opportunity to shamelessly steal some of their slides and use some of the stats that they gave literally a couple of weeks ago. So these are very much up to the minute numbers. And the key question is, how big is this IoT market space? Infineon, describing their own view of the market, what they call the serviceable addressable market, gave this slide. 2 important things. It's already, give or take, 9 billion euros in scale. So it's a very significant market. And secondly, it's growing at about 10% compound annual growth over the next 5 years. So it's a very reassuring, solid level, strong position to start from, with a good level of ongoing growth from a very large, well-respected and credible source. So I think that gives a good level of reassurance about the IoT space, its scale and its growth. The next slide I quite like is from Imagination. This was, I thought this was useful because it shows over here on the left-hand side, you've got these devices, these small, perhaps not super intelligent devices, sensors, not capable of doing too much locally. You might get a little bit of local data analytics there, but most of the heavy lifting is done in the cloud over here on the right. So you'll see on the right-hand side, that's where the cloud storage is going on. That's where the analytics is taking place. The key problem is, in between those two things, you've got the public internet. And that's the real issue, because for information to flow from left to right, from the devices into the cloud, it's got into a private cloud at the far end. It's got to go through across the public internet in many situations, and vice versa. If your analytics drive some activity that you want to take place or to push forward, and you want that to happen through your IoT devices in the real world, again, you've got to go back through the public internet for that to happen. And that leads to a huge reliance on something they call trust. And that's what this next slide is about, because this is, again, from Imagination Technologies. Their presenter, Mark Cannell, described this. And this is the key thing for the IoT, as far as Mark was concerned, was all about trust. And you can see here, it starts with trust of the device. You need to know, if you're transmitting information to and from across the public internet, you need to be sure that the device you think you're communicating with is the real device you think you're communicating with. You can't have any lack of security. But once you trust that device, you can start to trust the data, the information that comes from it or comes through the web to you from that device. That allows you to build some information patterns, pull in a larger amount of data from multiple devices, and that means you can then derive proper insights and decide actions that you want to take. And then you can fulfill those actions in some cases by pushing information or commands or instructions back through the Internet of Things to the devices out in the field to make things happen, to change the speed of an engine or change the temperature of some kind of device or some product or some situation. You can make a real world change because of that. And all of that relies very heavily on trust and security or certainty of trust across that chain. So I felt those were a few of the key things that, to my mind, came out of that event and were very useful for me in understanding some of the big drivers. It was interesting to see, even at the very, very top of the internet, of the IoT food chain, these largest players, they're still talking about device scalability and about trust, which is very interesting to see. After many years of IoT evolution and growth, there's still an absolute requirement or focus on those things. Now I'm going to take a quick sort of move to the other end of the telescope and look at it from very much from an end user perspective, looking at a couple of Tern's investee companies. And you're going to hear, as Al said, you're going to hear soon directly from some of the management teams of those businesses from whom I think you haven't heard before as investors. So hopefully that'll be useful. And I'll just quickly run through a couple of end market use cases in case that's helpful. First one is Wild Networks. So we'll talk to you about that. They run a business which provides a large number of different styles of network, including mesh networking, where you can bring lots of devices together in a difficult setting or where there's not much other connectivity. And this example is an agriculture technology business. They're growing, I think it's strawberries, and you can see down the bottom right-hand side, the sensor there is monitoring. It'll be monitoring things like the moisture in the soil or the temperature or the level of nutrients that these plants are receiving. And then that information goes up through the cloud into some kind of analytics platform, brought together with information perhaps around weather forecasting, which might be managed centrally, or demand profile. And you can even imagine a situation where this strawberry grower, if there's a sudden glut of strawberries, they want to slow down the strawberries. Normally everyone thinks about trying to rush things to market, but if the market is flooded with product, you might actually want to slow down the growth of these agricultural products to allow them to arrive later when you might get a better price. So there's lots of things that you can do in the cloud that then you feed back into the field to make things change. That's just one real life example of IoT in action. Another one relates to healthcare. This is Fundamental VR, who have a fantastic way of generating a representation of a real life surgical setting. This is a surgeon going through a mock-up, a virtual reality representation of a surgical procedure on some newly developed medical device. And surgeons need to learn how these things work. It's often an unsaid thing. You don't want to hear about how surgeons learn, how they practice these surgical techniques that they undertake on us day in, day out. They need to have a place to practice, a place to learn. Often that's done on dead bodies, on cadavers, but they're in short supply. And the difficulty is getting the surgeon to the cadaver at the right time with the right medical instrument, right medical device. It's very difficult to arrange. So Fundamental has a great platform for allowing this to happen. They build what they call a virtual operating room, which allows one operator even literally to whisper in the ear of the surgeon as he or she is undertaking this procedure, so they can learn together, they can develop their best practice and make sure that by the time they're operating on real patients, the surgeon is really, really well trained and capable of carrying out that task. The final example is a sad one. It's depressing. It's a very significant breach of security. It's also in the healthcare space by coincidence, but this is about where things have gone wrong. This was a German case late last year. There was a patient in a German hospital. That hospital was subject to a cyber attack, and that meant that the hospital was unable to deliver the care, that the devices they needed to use to deliver care to that patient were not available. The patient had to be moved elsewhere to a different hospital, and they very sadly died. So I think that really brings it home that security needs to be improved. It needs to be improved significantly, and that needs to happen now, and it's not being done. So there's a lot that can be achieved or should be achieved, and the industry has clearly got a long way to go to get that right. So then just to finish off, a couple of comments on Tern in particular, how it operates, and the way that it perhaps is different from some of the other investment opportunities out there. I think Tern is very focused on the way they invest. It's the how, the when, and the where of those investment decisions. A lot of it's driven by digital transformation. clearly COVID-19 is leading to a lot of opportunities around that as businesses accelerate their transformation processes, and Tern, I believe, is standing ready to try and deliver on those. Once the investments are made, it's all about helping and nurturing the businesses. I understand Tern runs a weekly or fortnightly call across its investee companies to help them share best practices, bounce ideas off each other, potentially work together or collaborate on things, but at least talk to each other and describe the way that things are being achieved and what they've been able to do in their own industries. And hopefully there's value of that across the network. And I'm sure that the companies will talk about that later on, but definitely that's part of what Tern offers. And then finally, patience and experience in managing exits or additional investment rounds. Al and Sarah and their team have a lot of experience of this. A lot of the management teams maybe are going through this for the first time. So it's great to see Tern able to offer those sorts of things to the businesses. And then I think it's only right to acknowledge that there will be some challenges in this space where Tern has to deal with a number of investee companies who would love the additional limelight and focus that Tern can offer, but they've got end customers who are very sensitive about divulging too much detail, too much information, because those customers, they feel that they're getting market advantage. They're doing better in their own market by using IoT in a clever way, and they don't want to give away that advantage. So there's an inherent tension there which Tern has to deal with. The other tension is to do with the frequency of news flow. Tern doesn't have a large number of investees. It's a relatively small group with not all that many investees. So it makes it very difficult for them to feed a hungry group of investors always looking for an RNS. I'd love to see an RNS, 1, 2, 3 a week. People would love to see, but Tern has to manage that pressure and deal with the fact that they've got a relatively small number of investees who don't have the capacity and certainly haven't got the ability to deal with a very high level of news flow. So they're treading a fine line on both of those two metrics. And I'd just like to finish with a final comment about the group. It's unusual for a business of this size, really, to have gone out during last year and made a couple of quite clear commitments about the fact they expected to have a new investment and a follow-on round or syndication by the end of Q1 of 2021. They said that, and then they've delivered on it. So Talking Medicines, who I know you're going to hear from later on this afternoon, was a new investment they made in late 2020, and Wild Networks had a significant valuation uplift in early 2021. So it's great to see the management of Tern committing to these things and then delivering on that promise in very short order. I think more generally, it's good to see the way that they're bringing both strategic and financial investors to these follow-on rounds. They have financial investors into Wild, and you've had other people downing into the Fundamental VR round. And Fundamental VR, the previous round, also included Mayo Clinic and a German business, Sana Kliniken, which are very significant strategic investors for a business involved in those sorts of activities. So I think a lot of things going on. In my opinion, there's a very, very strong flow in terms of what Tern's doing. In terms of what you can expect coming forward, I don't know anything more than you, sadly. Clearly, looking in the annual report, Tern have a strong focus on third-party investments and liquidity events. So hopefully over the coming weeks and months, those are the sorts of things that we can expect to see. But for now, I hope that's been a useful summary of the business, and hopefully that's a useful depiction of IoT more generally.
Thank you, Gareth, and I appreciate the kind words about Tern and our companies. But I believe it was a succinct overview of the IoT opportunities. I would like to now present to you a little overview of just how we at Tern are in effect providing this capability to our shareholders and the work that we're doing before I introduce the CEOs. So without further ado, I'm going to share my screen and start our presentation. And what I'm talking about here at Tern is, our focus on building great companies. We really believe that with careful selection, there is an opportunity to generate winning returns and winning capable companies that will have scalable effects in the markets that they serve. First, the important thing here is how we move forward. But first, the disclosure statement, and then just talk about our vision. And the vision of Tern really is working to become the go-to investor for young entrepreneurs that are creating disruptive companies. And we look to review these business plans, and through our deal flow, look to pick the ones that we believe have the most significant capability to turn what are brownfield current environments or markets to greenfield opportunities by accelerating their digital transformation and creating value for our shareholders. And I think this transformation has been exacerbated by COVID because it has created new ways of thinking about things that reflect the new normal. So, what's driving these new transformations? There are a number of key market drivers, but I think, as Gareth mentioned, what's really all about IR 4.0, or the Industrial Revolution 4.0, is the fact that we're moving from phones to things. We've moved from PCs to phones, where the phone has become an integral part of your banking experience and how you deal with your surgery and the GP at the surgery in terms of now telehealth and moving medicines. But the key market drivers in this transition from phones to things, has been the catalyst of COVID, which has imposed contactless requirements. It's really changed the way people have to work, not just remotely, but in situations where you have to make maintenance calls, where you need to meet a patient. It's become contactless, and this requires new forms of communications, new forms of delivering information, as well as collecting information. And as Gareth mentioned, the cloud is the key element that is changing and helping the adoption of IoT, such that it can provide the analytics and better analytics to make better decisions. And as we're seeing with everything that we're doing in the real world today, with devices that have moved to the very edge of the internet, that are providing information back to organizations. This information from the edge is providing digital sensing of the physical world, and allowing for this contactless way of operating to exist. So as we look at these companies that we're trying to invest in to create value for our shareholders, as well as the companies we have already invested in, we're trying to leverage partnerships and activities in this area with these companies and their customers and their go-to-market partners to make these businesses successful. Now, why is, as Gareth pointed out, the medical and the industrial segments so important to us? It's where the money is. There are over billions of dollars of investment already, and with two-digit CAGRs where these markets are growing. But most importantly, in the healthcare and the industrial segments, we're not waiting for new things to be developed. We're actually dealing with brownfield issues where they need to be transformed to take advantage of this new contactless environment. For example, the average regional hospital here in the United States has generally about 70,000 devices already installed in the hospital, providing some form of care and care management to its patients. Most of them not fully connected, and most of them not fully secure. And those are what we see as the opportunities to be in this market, in this field. And what's driving it, as Gareth said, is Moore's law. Moore's law is really, the idea that the performance of devices double every 18 months, and the price is cut down in half. And if we look at this chart that reflects critical IoT sensor components from 2015 to 2025, we're looking at about a 60% reduction in overall cost. But what's more critical to the IoT market space is that we're looking at about a 6 times performance improvement. It's the horsepower of these chips is being multiplied 6 times. And what does this mean? This means that applications that require artificial intelligence, machine learning, or natural language processing, or neural networks now have greater capabilities out at the edge that they never had before. We're seeing processors today that 10 years ago were only a dream in terms of the ability to perform and deliver critical computing necessary to provide the graphics for virtual realities like the folks at Fundamental Surgery use, and the AI individual machines that talking medicine uses to hear the voice of the patient. So we're seeing a dramatic increase in the performance of products from Imagination, for example, and Infineon that are in the marketplace at a much reduced cost that provides for more of the democratization of the edge so that more things can be connected and more things can provide important information. So now, looking at our portfolio, one of the things that we set out to do in building this portfolio as part of our sort of transformed investment strategy is to create one that has synergies between the companies, the synergies so that we can leverage the market knowledge and the contacts that we have and our portfolio companies have, and use that to create value by sharing customer information, products, and technologies, such that we create a force multiplier on every pound that we invest in these companies. So, looking at our flagship company, our first and original investment, Device Authority, Gareth gave a pretty good review of the importance of security, so I won't go there. But we're doing at Device Authority to leverage this ability to secure devices as we've created a company with critical partnerships with leaders in cloud computing and physical secure componentry that is required to provide device life cycle management, the ability to take devices, fix them if they're old devices that need to be upgraded and perform in a more secure fashion, as well as new devices, but provide a capability for the beginning use to the end of use of those platforms and those devices within an application. If you just think about how many cell phones you've owned since you started using smartphones, the phones change, but the applications you use on your phones remain the same. And what Device Authority is providing is an ability to protect applications back at the hospital headquarters, but provide the hospital the ability to manage the devices as well as add new devices into the field. And that's what Device Authority is about and what they're doing with their partners. And we own 56.8% of that company's shares in the marketplace. Fundamental was talked about again, but with Gareth. But what COVID has done is really leveraged the opportunity for pharma companies to change the way they market, not only teach people how to use products, but market products. The ability for sales forces to make physical visits to doctors and hospitals and teaching schools has been dramatically curtailed. So having a virtual reality platform where masterclass capabilities can be delivered with their haptic VR platform. When I say haptic VR platform, what makes Fundamental, we believe, unique in the marketplace is that it provides haptics, or the sense of feel for a surgical procedure, as well as the visual reality to the doctor performing the procedure, such that the doctor can learn and practice, as well as with colleagues in the room, as Gareth said, have somebody whisper in his ear or her ear about what is required or what should be done, or a different way to think about using the device. But the idea of now marketing devices using virtual reality and haptics has provided the drug and the pharma and the digital device companies that are now medical device companies with the capability to accelerate deployments, and by accelerating deployments and adoption, accelerate revenues and return on their investments, which are substantial in the billions of dollars for R&D. And we believe Fundamental is leading the pack here in delivering on that capability. And at Tern, we now own 25.9% of the business. Next is NVMA, and NVMA you'll hear from today, and I'll have Peter really provide you with the rundown on what's going on at NVMA. But this is a business that is transformed from a services company with tremendous expertise into one now that's creating a licensable product called Asset Minder, where Asset Minder enables companies to monitor and measure the performance of manufacturing lines, pumps, compressors, sensors that are attached to their machines, and make actionable decisions to reduce costly downtime and potential health and safety issues. So this is a really interesting company that is again, because of COVID and contactless environments, really relevant in the marketplace and in the industrial segment. And we own 97% of we own 50%, excuse me, of this business. Next in our portfolio is Wild Networks, and we're really excited about Wild Networks because it's providing technology that is very timely again in today's world order, that delivers internet access to areas where it's generally not available. And we think generally not available as to third world countries. But if we just think about the farms, and there's a farm out in Wiltshire that I know of, there is no access, to deal with the cows that are providing milk to Waitrose, to the farmer in that area. So this idea of where the internet is generally not available is an important step that Wild Networks is delivering, a capability that Wild Networks is delivering using satellites and satellite LoRa connectivity to generate this internet access, as well as through their mesh networking, also providing it in congested areas, or areas again where many sensors need to be connected all at once. For example, sports venues. So Wild Networks, and Alistair will provide some great examples when he speaks, is really changing the way the internet can be delivered, and how in areas like Wembley Stadium, where there's no internet when the stadium is filled because of the congestion, provide capabilities to address individual fans and customers, to create loyalty programs and provide for additional revenues for the teams that are playing. And lastly, you'll hear today from Talking Medicines and Joe, which is our new exciting investment, which is again leveraging this idea of the new normal, and providing pharma companies who spend over $30 billion a year in advertising that never gets directly to the patient, with the opportunity to really hear the voice of a patient, to go to the different social monitoring and venues that exist, like Reddit and Twitter, et cetera, and capture the voice of the patient, so that pharmaceutical companies can really understand why someone is using a product, why someone stopped using a product, and other characteristics that help them make better decisions for the patients, that create better patient outcomes. And we believe across the board here, our businesses are really focused on environmental issues and social issues that we believe are transformational for Tern and our investors. So just quickly to talk about how we view our net asset value growth, as we really look to our investments with a clarity of focus. Are they in IoT? Do they really provide some environmental social benefit from the products or the platforms that they're providing into the marketplace? Do we as Tern have the ability to nurture or grow this investment with the skills that we have as the advisors and monitoring our investment, and the capability to add to that? And then right from the beginning, we make the hard selections of these companies by trying to decide at the early days, where is a potential exit for this business, and what are the things that we need to do to grow this business and make it investable as well as attractive in the marketplace to a large company that is looking to solve a particular problem that we believe our portfolio company can address. And to provide you with an example here, we've taken for fundamental surgery, where we made a two-step investment as we went into the company early days as a seed investor, to help them build out their model, expand its capabilities with regard to the simulation and the channel marketing that was required, as well as provide some insights into the data capture. As a consequence of the work we did, we were able to, within about 18 months, bring in the Mayo Clinic, the Sana Hospital Group in Germany, and Downey investors. And we're able to take our seed investment at 1.9 million, and now achieve about a 27% uplift in our net asset value at fundamental surgery, and have our investment at 26.9% really reflecting a value of 3 million or an 11 million total market cap for the business. So what we did and how we did what we accomplished at Fundamental is what we're doing at every one of our companies, so that we can bring sustainable value, real value to our shareholders in terms of our ability to grow net assets within the name of our portfolio, in the structure of our portfolio. So we believe today Tern is really an attractive long-term growth opportunity for investors, because we're focused on a really big market. We've had a confluence of events that was created by COVID that has created more relevance for what we're bringing into our portfolio and our companies, as well as the volume of connected devices and the horsepower within those connected devices are breaking down what were cost barriers or performance barriers, so that adoption is now accelerating. And we believe the two markets we're focused on are ripe for rapid growth and capability to move forward. So with that, I'll end my remarks, and I would like to introduce Alistair Williamson, the CEO of Wild Networks. Alistair has done an incredible job of strategizing and putting together a business model that where the strategy of bringing communications capabilities into this marketplace is really critical. And there is a bunch of opportunities that are the integration of that strategy and the tactics that Alistair will now talk to you about.
Okay, perfect. So what I want to do is I just want to talk a bit about, what Wild does, and I think more importantly why we decided to do this, because that sort of brings forward the business rationale for the whole concept of Wild. So what do we do? So Wild enables affordable, and this is really key, it enables affordable connectivity across the world where there is no wireless coverage and where wireless networks are congested. So those are the two premises that Wild has actually built its business on. And if we look at the first premises, looking at areas in the world where there's no wireless connectivity, well, McKinsey have come up with a view that lack of global connectivity is basically hampering the growth of IoT networks from adding about $3 trillion to global GDP over the next 10 years. And that's fairly clear to everyone. Only 20% of the world's surface has wireless coverage. So we're looking at addressing that other 80%. So we went off and we developed Wild Connect. And Wild Connect is an affordable, I use the word affordable again, it's an affordable wireless solution to connect IoT devices and sensors anywhere in the world to low Earth orbiting satellites. And in respect to our second premise of congested internet connectivity, so congested internet connectivity sort of impacts businesses they lose about $5.2 billion a day, really in e-commerce due to congested internet connectivity. So we went off and developed a solution called Wild Mesh. And it's a technology that allows you to connect smartphones and IoT devices directly together in a mesh network without the need for Wi-Fi or 4G. So if you look at that, we've actually created an additional layer of wireless connectivity. So today you've got Wi-Fi as a layer of wireless connectivity, you've got 4G as a layer of Wi-Fi connectivity, and moving forward we're going to have 5G as a layer of wireless connectivity. So what we've done at Wild is we've added an additional layer of wireless connectivity to the whole communication network, and that's peer-to-peer device connectivity in a mesh network. So that's sort of a view on the technology, and I just want to come now and just look at the application of what we're doing. So if I address Wild Connect first, so Wild Connect, really there to enable affordable global satellite connectivity. As I said earlier, cellular networks only cover about 20% of the world's surface. We're looking at how do we get connectivity out to the rest of that 80%. So I hope that sort of explained a bit about the applications of the satellite IoT technology. But what I'd like to do is just take you through the three key attributes as to how we're actually delivering the solution and what the benefits actually are. So as I said before, this is all about providing global coverage and affordable coverage. And there's three things that we've actually looked at. One is terminals. So we've developed a terminal and we've low costed that terminal down to a position that moves terminal costs from about $600 down to about $40. We've looked at spectrum, and for satellite IoT operators, as you know, they pay governments billions of dollars to get access to spectrum. And of course, you know, that money is paid to the Chancellor of the Exchequer. Who ends up paying for it? It's the users, it's us. So what we've done is we've actually developed our connectivity platform to use unlicensed spectrum. So it's free spectrum. It's regulated spectrum, it's in the ISM band, but it's free. So we've actually taken billions of dollars out of the whole economics of satellite IoT. And thirdly, we've looked at, you know, how else we can reduce these costs. And it's really looking at low Earth orbiting satellites. So, you know, traditionally there's been geostationary satellites, 36,000 kilometers up in the sky, costs a huge amount of money. Today, we're seeing a proliferation of low Earth orbiting satellites being launched. Elon Musk's doing it. You know, Amazon are putting up their own low Earth orbiting constellation. And it's all about taking the cost of satellite communications out of the whole economic solution. So our solution basically addresses affordability, but global affordability, and making satellite economics the same as terrestrial IoT economics. If I just want to move on and talk a bit about wild mesh, and you know, when I talk about wild mesh, we're talking about how we solve the problem of internet congestion. And there's two key words to take out of here: resilience. Resilience points to solving the problem by adding an additional layer of wireless connectivity, and relevance is basically pointing at our overall solution. Our solution is about delivering relevant content that's relevant to your location and relevant to what you want and what you like. I have another video that I'd like to show you, and that will also explain some of the applications of wild mesh. So that's Wild Mesh. What Wild Mesh is really about allowing businesses to actually go out and build branded location-aware networks. It's about delivering relevant location content and marketing, enhancing customer experience and generating new revenue streams, delivering that content over Wi-Fi, delivering that content over 4G, but also delivering that content over mesh networks where those wireless layers don't actually exist or are congested. So I just want to go through a bit more about what does that market actually look like. There's three sectors we're going after, and the satellite IoT network, obviously, and it's actually two solutions from Wild. There's Wild Connect, which is the IoT module, and there's Wild Fusion, which is the platform that sits in the cloud, that manages the network. The size of that market is relatively clear now. We see the market growing to about $6 billion, but to give you an idea of what does that mean in respect to IoT modules, that's the solution that we're developing. Well, according to the latest reports, starting this year, with all the low Earth orbiting satellites are being launched, they're projecting or forecasting there'll be about 30.3 million IoT modules deployed starting this year by 2025. And that's the market that we're actually going after, that 30.3 million IoT modules. And then on the consumer mesh side, and that's all about how do we deliver location-aware content that's relevant to your location and relevant to what you like and personalized. Once again, we're now using Wild Fusion as a platform that sits in the cloud, and Wild Mesh as the software that allows you to connect devices in a peer-to-peer architecture. And if we look at the size of that market, once again, it's in the billions. You know, global location-based advertising is up at about $62 billion last year, and it's growing over 17% up to 2027. So very large markets. And then when we look at the enterprise mesh IoT networks, that's where we're now combining Wild Fusion that sits in the cloud, Wild Mesh, and the Wild Connect IoT module. So now we're actually connecting not just smartphones to smartphones, but smartphones to IoT devices, IoT to IoT devices, collecting that data in Wild Fusion, and then making actionable decisions on what we want to do with that data. And that's also a large market. If we look at the size of the mesh market, it's sort of forecasted to reach about $12.1 billion. So that's lots of billions of dollars. And so what we've done is we've looked at, well, what does that actually mean from a total addressable market? You know, what can Wild do in this market? And so we've gone through all the numbers, we've looked at all the growth drivers, and we believe our total addressable market is forecasted to grow to about $670 million by 2024. Before I move on to the next slide, I just want to point out that you've noticed that Wild Fusion is the platform that sits in the cloud that actually manages each of those three markets. Well, Wild Fusion is really where a lot of the intelligence actually sits in our overall solution. It's the product or the solution that really turns sand into gold. So if we look at where we are with customers, so Wild Connect, the terrestrial IoT bit, which doesn't include the satellite IoT development. So the terrestrial IoT bits we launched in 2019. It was towards the end of 2019, and that was using LPWAN or LoRa to connect devices in agriculture, in environments. And we got a lot of customers on board, and we started to market the solution, sell the solution. And that sort of represented the majority of our revenue in 2020. That was Wild Connect, the terrestrial IoT bit. With Wild Mesh, we launched that in Q3 last year, Q3 2020. It wasn't the greatest time to launch a mesh solution, considering stadiums and retail were all in lockdown. But we sort of pivoted a bit and went straight after the NHS, really to sort of utilize our location capability. Because I talked a lot about location. We have, you know, a lot of location capability in the solutions. So we used that technology and pivoted it a bit for looking at how we manage social distancing in care homes. Wild Connect on the IoT side, the satellite piece on the right-hand side, we, as you may know, we've signed up a satellite operator that's working with us, and we're going to be launching the commercial solution in Q4 this year. And we'll be actually delivering the piece on the ground that connects sensors directly to those low Earth orbiting satellites. So we've signed a whole load of partnership agreements. We've signed up with Fujitsu, Alliance, KWS, Weason, and there's a whole load of others that I can't actually talk about. We've got confidentiality agreements with them, all focusing on the Wild Connect satellite IoT piece. If I look at the combined revenues for all of the partner agreements we've actually got signed up on the satellite IoT piece, it comes to $132 billion. So our focus is really to leverage these partners we've got to allow them to take our solution to market. They've got existing contracts, they've got the workforce and the sales team in place. So we're going to use these guys to actually leverage what they've got to take us to market. So I'm just going to end my presentation just going through again what the three markets are. There's the satellite and terrestrial IoT networks. It's about creating affordable wireless networks to control and collect data in the agriculture, environment, oil and gas space. There's a consumer mesh networks piece, which is all about the creation of customer engagement, generating new revenue streams through location-aware targeted marketing, and that's in retail, stadiums, and venues. And then there's the combination of mesh and IoT, and that's more focused on the enterprise bit. It was a bit like our care homes, where we're sort of connecting IoT devices to smartphones and creating a real mesh network of smartphones and IoT devices and enhancing the communications and improving operational efficiencies in one single network. So that's what I'd like to present. I'm happy to take questions and answers when we're finished with the rest of the presentations.
Thank you, Alistair. That was really well done and hopefully informative to our shareholders. Next up is Peter Stevens, and our new CEO at NVMA. And Peter will tell you about the exciting things going on at NVMA, particularly with AssetMinder and our ability to remotely monitor and control products that are in the field and manufacturing plants and whatever. And with that, please take the screen and speak to our shareholders. Peter, thank you.
Great, thanks, Al. Hopefully everyone can see my screen and see AssetMinder here front and center.
Yes.
So thank you very much, and very pleased to present NVMA to you. I'm Peter Stevens, the CEO of NVMA, and we're the company behind AssetMinder, which is a SaaS-based industrial IoT product. And I'm going to take you through our product and the development and the rollout that we've seen. But talking about some of the previous presentations, we're taking advantage of a lot of those different elements around industrial IoT and IoT elements, including those low-cost sensors, the advancements on cloud computing, 5G technologies, artificial intelligence and machine learning is part of our business. We are maximizing the use of edge computing and also deploying really great UI, UX, and we have a fantastic group of software developers and engineers that we work with. And on top of that, a lot of practical real-world experience around factories and automation. So a little bit about us and the fact that we're a company based in the UK, but we really are a global company and have worked around the world. The teams that we have here have 30 plus years of global IoT experience. The founders and the group of developers have really got practical end-to-end operations capabilities across a whole range of different factory settings, transport settings, a lot of different processing and industrial settings with respect to putting digital automation and hooking up factory floors and factory settings to gain data and to be able to analyze important critical equipment and to be able to give factory managers the information that they need. So what we like to say about NVMe and what's different about us is we're really born out of the real world of people, engineers who spent time in factories and factory locations, really getting their elbows and hands full of grease as they've brought digital automation into the factory floor. So a bit more about AssetMinder. A bit of background about us is that we are artificial intelligence driven. It's an industrial IoT SaaS platform, software as a service, offering intelligent solutions to a whole multitude of different type of end users. We're a company that provides multiple modules solving complex industrial challenges. The business in our platform is easy to deploy. It's remote asset monitoring and management with a whole host of different productivity solutions that you can purchase through different modules. One of our key assets is the fact that we've done a lot of the work to make sure that any machine can be connected. So what we like to say is we're machine agnostic connectivities for factories, for plants, for utilities, for infrastructure, for smart cities, etc. If you have a machine or an asset that needs to be connected, we're your team to put this together. So we provide OEMs and aftermarket with new sources of revenues and low return to help them stay connected with their customers, providing great parts and service agreements and extended warranties, a whole host of new services that OEMs and factories can use after they sell their equipment to other customers. So we really have a rapidly scalable SaaS product, all based in the cloud. We're experiencing strong growth in the UK, and that we've got a whole host of great channel partners working with us, as well as our own direct sales force. We're expanding into Europe and the USA during 2021. So just to take a step back and understand what's going on with industrial IoT and why are we where we are today. In fact, there are a lot of things that are connected in the industrial setting. However, problems occur every day on factory floors. And why is that? Well, actually, 70% of machine data never gets picked up at all. And you'd be surprised for that in a very connected world where everyone has 3.3 billion smartphones out there. Why can't all industrial settings be hooked up? Well, it's complex to hook them up. It's difficult. And then once data is flowing, it's also difficult to manage that data. So that data that is picked up is often fragmented or siloed. It's used after the fact and not proactively. It's quickly forgotten, and it's frankly useless unless analyzed. And so that's what's been happening too often across factory floor settings or any industrial processing setting. And even well-connected factories don't have a single point of view or analysis and only get alerted when things go wrong. And so as a result, that results in unplanned downtime, and it has a direct impact on margins of a business. So we at AssetMinder and NVMe, we're now delivering customers the control that they need in one pane of glass. So we put all of your factory elements, all of your processing facility, all of your retail floor connections, all of your factory plants and plant equipment into one pane of glass, giving you all the information you need, all the alerts around all of your business, and allows you to manage that from one location. We also offer sub-parts of this network for key members of your staff if they're operating one core element of your business. So for example, here's AssetMinder deployed in a factory setting. It's a proactive digital transformation is what we call it. You have a typical factory setting with people and machines. And what we're doing is accelerating digital transformation. So Nick, who's the floor manager here, is connected up to all of the assets in the business. You see that there's one asset, one of the robots is potentially going to have a problem in the future. that's monitored by our platform, and we've analyzed that there's a potential issue with that particular product. An asset minder also allows you to hook into the OEM who provided you that machine, and through the service agreement, service warranties and service providers, as soon as there's a problem with one of your devices, you're already in communication with a parts supplier that's coming out to provide the needed part to repair that particular machine. So we work closely with factories, we work with parts suppliers, we work with other OEMs in connecting up their whole infrastructure so that the company can keep running and that you can keep the business uptime all the time. So equipment agnostic visibility and proactive AI insights is what we talk about that improves efficiency, productivity, and ultimately margins and profits. So artificial intelligence driven digital insights, we have a extensive machine data library with a historical information around a whole host of different operating machines, so that when we have new customers that hook up their factory floor to Asset Minder, they join a network of extensive library and are able to pull out information that's critical for operating and predicting problems within their own machines. So we have them focusing on relevant data. We label key events and give warnings to the management teams and help them focus on the key elements that they need to focus on. We have warnings and reports and keeping people posted at all times. We're continuing to refine our models, and we're continuing to understand the machines that we hook up and hook into to be able to understand if they're working effectively and efficiently. And we are able to tell if there's an anomaly detection or any sort of issues and provide those insights instantly into our platform so that the management team can target issues immediately. So what are we doing with this platform and productivity perspective? So we take a look at some of the KPIs that people want to achieve. And they're using Asset Minder in a whole host of areas, basically to improve productivity. So if you look at some key statistics, 1% increase in production of some key factories results in a 7% increase in profits. However, if you look at productivity basis, most companies, most factories actually operate at a 60% productivity level. And this is something we called OEE. And that's a key KPI that factories try to follow. Now, Pepsi-Cola or Coca-Cola and their bottling factories probably operated around an 85% world-class productivity level. Most factories, as I said, are at 60%, but actually even more factories operate at 40%. So by deploying Asset Minder, we are helping you to identify the issues that are slowing your factory down, reducing quality, reducing productivity, and as a result, will help you increase your overall equipment efficiency. And by the way, increasing your efficiency also reduces your cost of labor, but it also reduces your utility cost, it reduces wastage. And as a result, and as companies are very focused on their CO2 equivalent usage, we're also helping companies deliver on their ESG goals with respect to a better usage of utilities and energy components. So what do? So we actually deploy a wide range of analytical tools. As I mentioned, artificial intelligence and machine learning and a whole host of algorithms to historical data that we have on our cloud computing network that we then link up with assets that are connected into our network. And so we then begin to listen to our customers' machines' vitals, almost like a medical technician. We help them maintain their operational fitness. We diagnose issues before they happen. We proactively prescribe service plans so that maintenance can happen at nighttime or in time or when there's not a peak time in the factory usage. thus reducing downtime and an increasing operating efficiency. So we're all about remote asset monitoring, and remote asset monitoring can happen in the factory floor. It can happen out in the field. It can happen in ports. It can happen in food processing plants. So what we find is that asset miners being deployed in a whole host of environments. So we've got no disruption to existing factories, frictionless deployments, and proactive management. So part of the key to Asset Miner and its industrial automation is that we want to make and democratize industrial IoT for the masses. And so we can only do this in a SaaS setting. So instead of creating a bespoke digital automation solution for a factory, for a top corporate, what we're trying to do is bring all of these capabilities, now that we have the cloud computing and lower cost sensors and 5G, into the SaaS setting so that we can make Asset Miner and industrial automation available to the masses. And so the result is that we have a platform that's easy to install. It's click and connect, it's drag and drop, it's plug and play. And we continue to improve our platform to achieve these objectives, to provide a seamless customer experience and to be widely available to a whole host of different size companies out there. So we have launched a couple modules already. We've launched Asset Miner Connect and Asset Miner Reliability during 2019 and 2020. Asset Miner Connect connects all your assets into one location so you can view them on one pane of glass. We can create customized alerts. We can provide time series analysis so you can see historically what's been going on with each of your machines. And then reliability provides additional analytics on top of that, some of the artificial intelligence that allows us to do more predictive maintenance. We do anomaly detection, and we're allowing for prescriptions to be offered to factory managers to help them decide what to do with the information that we provided them and how they can maintain those pieces of machinery and what parts they may need to order in order to fix the problem. During this year, we'll also be offering additional modules, and they're already launched in bespoke elements to some larger corporate customers of ours. We've got Asset Miner Utility, which is bringing all of the host of utility elements in and out of a factory, again, into Asset Miner. So not only can you maintain and manage your factory equipment and machines, but also pair that with the utilities coming in and out of your business. And part of that is monitoring waste management, power management, compressed air, a whole host of different utilities. We also help you improve productivity with Asset Miner Productivity, and that's around improving overall quality and efficiency ratings. We also work with a host of maintenance companies that are maintaining assets out in the field, and there are a whole range of different service options we can provide through Asset Miner Serviceability. And then we put all of these together within Asset Miner Enterprise, which is overall process management, whether that's one factory or a whole host of factories, so you can compare and contrast and be able to manage across your plant, whether that's in single country or multi countries. So we're already deployed in a whole host of different companies around the UK and now into France and Belgium, and we're expanding into the US. We're in water treatment facilities, we're in factories, we're in quarries, we're deployed with smart infrastructure and food processing plants and port authorities. We're working with global industrial players. We're working with national retailers. We're working on railroad networks, and we're hooking up global food brands. And these activities are happening in the UK, across Europe, and into the US with some great channel partners. We're also working with our direct sales team. And also Tern's been a great partner with us as well. They too have been operating, our board members have been operating SaaS business and tech businesses, and they are at the seat around the table with us as we're deploying and making decisions around industrial IoT. This is a business in a sector that's moving very rapidly and is developing very quickly. And it's great to have the Tern partners who also are meeting and working with a lot of our other compatriots around the market, making great introductions for us, and introducing us to new players, and helping us stay abreast of these trends in what really is a really rapidly developing market. So what we say is our SaaS model is really simple and straightforward. It's a low upfront implementation fee. You have an annual subscription providing updates and support. There's usage-based fees over certain thresholds, and modular product upgrades. So the key markets that we're focused on is our home market in the UK, but expanding into Benelux. And then we're also expanding into Germany at the moment with a large industrial player there, and the US as well as a key market for expansion for us. So we are growing into these new markets. We're leveraging key pan-European industrial sales channel partners. We're upselling to additional AssetMinder modules that I've told you about. So not only are we selling to new customers, but we're going back to our existing customers and selling them more, and they're hooking up more and more of their own assets. And so one of our key water utility partners started with one asset at one facility, and now they've hooked up thousands of assets in about 100 facilities. And we're currently talking to a customer about launching around 15,000 sensors around the world, and talking to national retailers about hooking up tens of thousands of sensors across the UK. So this market's really expanding rapidly, and we're right in the heart of it. And so we're really excited about scaling up the modules that we've built. And so we continue to invest in our sales and marketing and up-tiering the AssetMinder user experience, and making AssetMinder really easy for our partners to deploy. And so that's a quick run through of AssetMinder and NVMA. Thank you.
Thank you, Peter. And I hope our listeners really appreciated the fundamental change you're making to the manufacturing capabilities of enterprises today, because I think not only is it relevant from a contactless perspective to do these things, but also as nations start to re-energize onshore manufacturing, the capabilities of that brought to you by AssetMinder provide them with a competitive way to bring those manufacturing lines and those new manufacturing plants, or re-engineering those new manufacturing plants to be onshore and provide strategic and national security aspects to what we're doing. So I think, AssetMinder and NVMA is well positioned in the marketplace today to make a difference, and we're excited about the opportunity. I'd like now to introduce Joe Halliday, our CEO from Talking Medicines. Joe has a lot of experience in the area of brand marketing and brand awareness. And what Talking Medicines is doing is providing insights to pharmaceutical companies in areas, particularly with the patient, that they've never explored before because they couldn't get there. So, Joe.
Cool. Thank you, Al. I'm assuming you can all hear me. Please do shout if you can't, but I'll keep going. I'm delighted to be here tonight. So thank you for introducing me. I'm the CEO of Talking Medicines. Talking Medicines is a data insights company. We're headquartered in Scotland, in Glasgow, and we have a global footprint, and we certainly have global ambition. Our talented and growing team are our greatest assets. They work from across the UK, and we've really excelled during the pandemic through adapting our work practices and staying really focused to our mission. So it was great to have Tern PLC invest in us in November 2020, making us the most recent of the investees in a late seed round. And tonight, really, in just 15 minutes, I'm going to give you a little bit of our story, a story that we think is more relevant than it's ever been. I think you would all agree that there's nothing more important than your health, the health of your family, and the health of your friends. And what we do at Talking Medicines is we capture the voice of the patient with artificial intelligence. So we're on a mission to become the world's organizer of patient intelligence by medicine. And what we mean by that is we want to be the eyes and the ears of what people say about their medicines in the real world. 50% of medicines are just wasted. They're not taken, they're not understood, they potentially go down the toilet. And that loop between patients and pharmaceutical companies about how medicines are taken in the real world isn't working. It's never worked. Lots of people are trying to address it, and we certainly believe we're part of that solution. And the reason we think that we can be part of it is because people talk about their medicines. They talk every day. They talk in unstructured ways. They talk in plain language. And there's billions of posts on public and private social digital networks. The medicines that people are talking about are part of a huge global pharmaceutical industry. As many of you may know, there's 130,000 medicine packs. That filters into 15,000 key medicine brands. The sector itself turns over 1.3 trillion. And pharma itself spends £30 billion on marketing each year. When we say that Walt Disney spends $3 billion, a 10 times hike on that for pharma means they're big investors in marketing. And yet there's no robust, systematic feedback on what patients say about their medicines going back to pharma. Once somebody leaves the pharmacy, the data stops. The feedback that pharma do get is messy and unstructured, and this is where talking medicines come in. So we address the problem that pharma companies are disconnected from their patients. They're governed by regulation to protect patient safety, but those rules have also meant that the sector, through inertia and slow adoption, has been unable to take advantage of the tools that other sectors have enjoyed to build and measure brand equity and customer experience. The customer experience that pharma listen to is about health professionals, but the ultimate beneficiary is patients, and it's patients that we want them to listen to. The feedback from patients is largely filtered because of the focus from the industry on health professionals, so it doesn't necessarily get translated. Medics and patients do not speak the same language. There needs to be interpretation. So at a time when most pharmaceutical companies will declare that they're patient-centric, they have it in their mission statements, they don't actually have a way to listen to that patient feedback at scale, creating a blind spot. So the blind spot I just mentioned is a lack of structured patient feedback, and that just got a whole lot worse as a result of a global pandemic that we're also aware of. Patients haven't been visiting their doctors and consultants face to face. There's actually less feedback even coming through that indirect loop. Pharma reps who have been the contact with doctors and consultants haven't been able to visit them. So again, less of that feedback is coming through. Face-to-face traditional research has been difficult, and advocacy groups and patient groups have been overwhelmed in terms of people trying to find people like themselves online. So the traditional ad hoc patient feedback loop has faltered even more during the pandemic. And at the same time, the pharmaceutical sector, as Al said, has found itself short in digital skills at a time when all industries need to be digital first. We've heard many times firsthand from clients in pharma companies how they know and they realise that they need to transition from effectively digital skills that were created in the millennia to today, and particularly embracing data-driven decision-making. There's no going back for the sector. And this is an opportunity. It's an opportunity right now to accelerate change in a way that was unable to happen before the pandemic. And at Talking Medicines, we've got a solution for robust, actionable patient insight, which has come at the right time to disrupt and transform access to patient feedback. So our new global data insight service is called Patient Metrics. It's driven by clever tech that uses artificial intelligence, machine learning, and natural language processing. We have patents pending on our invention and the way in which we capture, structure, and curate the voice of the patient by medicine into actionable insights for pharma companies. Our proposition is a SaaS model selling data subscriptions to our target persona of marketing directors within pharma companies. And we do this by sourcing unstructured feedback via the billions of posts that people put up every day. It could be on Twitter, could be on Reddit, could be on a forum, it could be on a blog site, and it could be anywhere within the world. We access that raw data legally and ethically as source input for our artificial intelligence. The AI models that we've developed have been trained by our own gold standard training data, and we create that through our own team of annotators. We currently have a team of about 20 annotators, and we constantly evaluate our quality against the human standards of accuracy. And what that means is that we're able to process the unstructured text at high level of robustness to be able to identify and isolate the voice of the patient. We separate the voice of the patient from the noise, and the noise could be the voice of the press, it could be the noise of health professionals, or it could just be others who are posting who are not specifically talking about their own experience about medicines, and we'll be able to filter to that gold of the patient voice. Medicines are uniquely identifiable in text by their name, so we can match the names, we can normalize them across markets so that we can ID a medicine brand to the database that we've built and we hold of the properties of 130,000 medicine packs. We embrace regulation, we work with the regulators, the FDA, the MHRA and European Meds to bring on new medicines and to stay up to date on the medicine database. Once the signals are filtered and structured, we then apply a mathematical model to create a patient confidence score by medicine. This score is being built by our data scientists and statisticians to give a benchmark, which is a scorecard on how patients are feeling about a medicine at a particular time and over time. The patient confidence score trends in real time. It shows the highs and the lows versus competitor brands, and it's shown as a line graph against time. The sector operates on historical logistical data about how medicines are prescribed. Data sources can be weeks or months out of date. Our data is very different. It gives a pulse right now on actual patient experience. Deeper analysis can then be accessed on the cause and effect for why the score changes to give a more depth insight. The problem that we're solving for our pharma clients is their lack of tools to know whether their marketing is cutting through, hearing it for the first time directly from patients. By giving a patient confidence score that is generated directly from patient feedback at scale, we're taking out the middle layer of feedback and placing patients right within the marketing departments of pharma. The actionable insight means that marketing can be evaluated as well as being used in planning future patient strategies and support. The benefit is more efficient marketing spend and ultimately keeping patients on scripts to drive commercial return for those pharma companies. But the ultimate benefit is better patient outcomes. Our go-to-market is a combination of inside sales and white glove account management to make sure that we land and we expand within pharma companies where we can scale by user, by location, and by medicine. We're already working closely with a number of large pharma companies to develop the proposition across the UK and US markets before rolling out more globally. We work to high data quality standards, and since our scores are generated by machine, our data doesn't have adverse event reporting implications for the industry, which means the traditional barriers to social feedback have been bypassed. We're not regulated through any specific pharma frameworks, but we believe this is an opportunity for us to lead and create those frameworks for data quality standards in this sphere. The future product roadmap is exciting. We have opportunities to accelerate data sourcing, release new features with deeper contextual insight that's coming from our AI machines around entities such as symptoms, feelings, gender, severity, adherence. We put the customer at the center of our strategy of product-led growth, with a customer advisory group already in place, and we will continue to listen to their needs, including how they can combine their own data sets along with ours within the product. We'll fully launch into our beachhead market, but also we have adjacent opportunities in pharmacy, health insurance, and other areas within large pharma. Patient metrics is unique in in being a data insight service, we don't believe that pharma will be able to create this kind of service themselves because they are held back by regulation, fear, and inertia. We differentiate ourselves through the way that we process social intelligence specifically for the industry so that they can come to us as a supplier. When we look at the competitive set, they sit around these adjacencies. And here I've focused on what makes us different. Social media analytics, which is a £7 billion market, is growing with a compound annual growth rate of 23%, with companies like Brandwatch trailblazing the change. Market research is a £73 billion market, with companies like Kantar operating in pharma. Pharma service outsourcing, led by IQVIA, is a massive £61 billion market. And we're different because we train our models to strip out the voices that are not coming from the patient, to take away the noise and provide high-grade feedback. That takes us apart from the social analytics market. We uniquely match to the medical taxonomy of medicines in a way that our competitors don't. This takes us aside from the research companies. Our database of medicines has been built with input from those regulators and is actively maintained. It's a huge asset for us. The patient confidence score itself is a unique measure from the AI machines, and we'll establish it in the same way as NPS, Net Promoter Score, because people know that that is the way to cut through and get a score for likelihood to recommend. This overcomes many of the concerns that pharma have about social intelligence when they're worried that by embracing social intelligence, they're held back by live feeds and adverse events and regulatory boundaries. The patient confidence score being generated from a machine bypasses that. Finally, we only service the pharma sector, and we've designed our social intelligence to meet the compliance standards of the sector. We don't work across FMCG brands or other sectors in a way many competitors do, so we're able to focus on the needs of pharma. Many of the companies I've profiled here could potentially be partners of the future. Because our patient confidence score is unique, it can complement others who are also supplying into pharma. Coming on to our team is strong. The founding team is led by myself, Elizabeth and Scott. We all have previous startup experience and skills that complement each other. We bridge the worlds of marketing, life sciences and tech, which has led to our unique proposition for pharma, in that we're bridging marketing excellence through artificial intelligence alongside understanding the rules of engagement and compliance around medicines. We know patients, we know medicines, we know patient data, and we know that artificial intelligence is the next frontier for pharma. Our board is strong with non-exec Ben Cons, formerly a director at IQVIA. A number of our senior team have been at IQVIA or Brandwatch. We have a customer advisory board that represents the industry, and we're committed to listening to customers. We have charters for both customer excellence and patient excellence. Our Sisto from Tern joined as our chair in November and has given us strong board leadership in getting ready for Series A investment this year and accelerating our product-led growth strategies. We've benefited from the bi-monthly meetings that Tim mentioned with the other Tern portfolio CEOs, and we enjoy the positive learning environment for acceleration and scale. We look forward to working further with Tern as we move into our next stage. We have a strong commitment to ESG, particularly through driving better patient outcomes and in our team's commitment to diversity and investment in young people. So to finish, to summarise, we have a vision and ambition to scale Talking Medicines into the global leader in organising the voice of the patient by medicine. We're on our way to achieving this, and we're excited to have our team in place ready for our next stage of global commercialisation. Tern have added significant value to us since November, and we look forward to accelerating together. I hope that the story you've heard tonight shows you how we're contributing to a healthier world, ultimately connecting pharma to their patients by medicine for better patient outcomes, alongside meeting successful stretch business milestones to scale Talking Medicines as the world's organiser of patient intelligence by medicines. Thank you for listening, and if you can follow us, please do, at Talking Medicines and Patient Metrics. Thank you. Back to you, Al.
Thank you, Joe, and thank you for the real crisp insights into the pharmaceutical industry and the massive amounts of money that they spend, and the big problem that you're solving for them. I think it's really interesting, and relevant in today's world. So hopefully, you heard from us today. In plain speak, we try to minimize the technology talk that is sometimes easy to do. But I wanted to sum up with, if there's anything at Tern, we're looking at data as the new currency, and the companies that we're investing in are all about detecting, protecting, and collecting information such that it can be trusted, analyzed, and actions can be taken. So I think we have a very exciting portfolio, a growing portfolio of companies that are all focused around data. And hopefully you heard through the different discussions from Joe, Peter, and Alistair, the synergies of sharing ideas in AI, machine learning, and customer acquisition that leverages our pounds of investment, such that we can create more value quickly and more value more economically. So with that, I'll turn it over to Tim to start our Q&A session. Tim?
Thank you very much, Al, and thank you very much for everybody who's presented this evening. If all the panelists would like to turn their videos back on, we'll go to them one by one. We have slightly overrun the initial hour and a half, but given we've got over 120 people still online, and we've had a number of questions, we'll plough on, and hopefully everybody will bear with us and stay to hear some of the questions. If I start off on the individual questions for the various presenters from the portfolio companies, we have, to a man and woman, had thanks for all the presentations. They were excellent. But starting first with you, Alistair, because you were the first to present. Obviously, there are a huge amount of opportunities for Wild, and people are focused on particularly the things that have been in Tern announcement. I don't know if you can give us a little bit more flavour on the satellite opportunity. Obviously, there's a huge market opportunity there, but where does your uniqueness lie, and where are you going to be actually focused on initially in generating revenues in that market?
It's a good question. It's a relatively simple answer. So what's unique about what we've done is basically creating, I'll go through again, it's creating affordable connectivity. So we have taken out of the end-to-end solution, satellite IoT end-to-end solution, we've taken out licensed spectrum. That's billions of dollars of cost that in effect the end user pays for. So we've taken that cost out, and we've managed to take that cost out by utilizing our expertise in LoRaWAN to use that as a connectivity technology to actually connect devices directly to satellites, which is pretty difficult because if you think about it, these satellites are 700 kilometers up in the sky, and they're traveling pretty rapid, by the way. And we've got to solve the problem, multiple problems. One of them is, how do we mitigate interference? Because this is unlicensed spectrum, although it's regulated. So we've written a whole lot of algorithms about how to mitigate any interference. We've looked at the fact that our device needs to be connected to a sensor and stuck in a field or in a glacier or somewhere where there's no power. So our device has to stay in the ground for 10 years on battery power. So we've had to look at how we reduce the amount of battery consumption. There's no electricity out there. And that's one of the key technologies and key capabilities that we've brought to the party. So it's all about understanding when to switch the sensor on, when to start to collect data, knowing when that satellite is actually available to collect data. And it's about a 14-minute window when you've got to wake everything up, collect the data, know the satellite's there, get the data to that satellite. So this is really unique. And this is the fundamental unique capability that Wild is delivering from a technology perspective. Then from a market perspective, where are we going out? So we're focusing on the ag tech market, agricultural market, the environment market, oil and gas, and maritime. Maritime is really important. There's container ships all over the place carrying perishable goods. 25% of all perishable goods are chucked in a bin by the time that container gets to the port it wants to get to. So that's a huge waste. So all of these guys, Maersk, all the big shipping guys, they're all putting sensors, humidity sensors, temperature sensors into all these containers. We're taking all that data and making sure that perishable goods actually arrive at their destination and in a fit state for consumption. So agriculture, really important. 30% of the world's wastage in water comes from agriculture. It's a problem that needs to be resolved. The population is growing from 7 billion to 9 billion in the next 30 years. We can't even feed the 7 billion we've got at the moment. Soil erosion, forest erosion, everything needs, technology is needed to come in the agricultural sector to ensure that we can feed ourselves, to ensure we can protect the environment. And there's a huge amount of money being pumped into technology in agriculture, and as much as is in the environment. So to try and give you a geographical view of where we are, we're looking at agriculture. It's Brazil, I would say the whole of Latin America, the whole of Southeast Asia, Russia, Eastern Europe, and the US, which is another massive producer of agricultural products. So to quantify, I'd just say globally is the market we're going after. Our uniqueness I've just explained. And I think the third part that I wanted to bring out again is that we've got some seriously big partners that we've signed up. As I said, they have a significant chunk of revenue. So we're going to be leveraging some big partners to get us to market. I hope that helped.
Very much so. Thank you. Just a final question before I move on to the others. Moving a bit closer to home with mesh networks. Obviously, there's been some coverage of the care home work that's been done in Scotland. Many people are keen to hear, how that's progressing and whether it's a solution that might have wider uses, particularly in a post-COVID environment where there'll still be a need to monitor people, particularly in situations like care homes or hospitals or elsewhere where you need to know where people are at a particular time.
Yeah, absolutely. So the care home project was about using our location capability that we were using in stadiums and retail, etc. So it was using that location capability to create these 2-meter bubbles. These were social distancing bubbles. So we just used the same technology. We pivoted during the pandemic, which made a lot of sense, considering stadiums and retail were basically in lockdown. But the underlying technology is the same. So the care home business is going really well. We've signed up Ascom, that's they're a global healthcare reseller for a while, that is. And so they're taking our solution to market. We firmly believe that the solution that we've developed is not just solely about social distancing. We've built into this product the capability to sit at home on your app and book a slot to go and visit the care home or visit the doctor. So there's all that capability built into this app. We've also built in an equivalent of WhatsApp into our application so that staff can communicate with each other, staff can communicate with visitors. Visitors can sit at home and get a lot of information about how their parents or the residents are within the care facility. But we're also now learning an awful lot more about requirements in care facilities. And we're seeing this move from a pilot into more of a solution that we believe will become part of a healthcare toolkit, not just in care homes, but also within the hospital environments, where we're now looking at how we connect ventilators. And we talked about the enterprise mesh. Is how do we also now connect ventilators, oxygen canisters, beds, a whole lot of assets actually into the mesh network and also be able to track where they are. So it's not just looking at residents, patients and staff, but also all of the asset that's within that environment and bringing it into one single network. And the last bit that part of your question was, do we see this moving into other sectors? Well, yes, we do. We're using our solution and its location capabilities for slightly different applications, but it's everything from delivering location-aware content to managing assets to figuring out where stuff actually is and communicating with staff, visitors, and residents within healthcare facilities, and also within stadiums, but it's obviously not with residents, but in football stadiums, in retail, and businesses in general.
Excellent. Well, thanks, Alistair. I would like to talk about that all night, but must move on. Peter, couple of questions for you. One was just a small clarification from a shareholder. It says that NVMA appears to have a sister company, In Control Solutions Limited, with similar directors. Could you just clarify what the relationship is between those two organisations, please?
Sure. Yeah, thanks for the question. So In Control is basically an industrial controls company. It was founded by Pat Nash and Jan Himper many years ago, and NVMA was spun out of In Control. Pat Nash continues. He focuses 100% of his time on NVMA and is focused on the growth of NVMA, and is director on the NVMA side. In Control continues its business. It's complementary to NVMA. We're focused on industrial automation. In Control is focused on industrial controls. So as you can imagine, there is some introductions of customers that In Control makes to us. And there's some opportunities that we have in NVMA that we send to In Control. But that's about the base element of the relationship between the two companies is, passing on different customer opportunities. And then there's common shareholders in the two founders of Pat Nash and Jan Himper.
Thanks, Peter. That's clear, and I can see the different focus there. Moving on more to look at the business. Obviously, from your presentation, Asset Minder looks fantastic. The return on investment, if I'm running a factory, is huge. There's a great global market opportunity. You've been focused mostly on the UK to date, a bit of expansion in Northern Europe. But could you give a little bit more on routes to market and how you're looking to expand further? I've had a couple of questions. Is the focus going to be sort of gradually moving out across Europe and then elsewhere? Or are there other geographies or sectors that you will focus on? And how will you do it vis-a-vis partnerships?
Yep. So you're asked, I guess, about geographies and then channels.
Basically, yes.
Yes. And so we're spending a lot of time on channel. In 2019 and 2020, we had, really one key channel partner. And that's been on a great partnership with a company that's basically a service maintenance organization. And they have introduced a lot of companies to Asset Minder, and that's been a great partner for us. And so companies that are sending, a man or a woman in a van up and down the M1 or the M4 out to service machines can really be a lot more efficient by going ahead and hooking up those machines to Asset Minder. So companies that are providing maintenance or providing services to industrial equipment or in critical infrastructure, whether that be railroad infrastructure, transportation networks, port authorities, all of those companies that are out kind of servicing those type of critical infrastructure can take advantage of Asset Minder. And so we are partnering with a lot of those organizations who are then deploying Asset Minder to their end customers. We also are working with, frankly, a lot of hardware companies. If you have a factory or someone who's operating a lot of different smart meters and smart products, the first company that they typically go and talk to is frankly a hardware company. And then that hardware company says, we can sell you some sensors, but you need to hook them up to a platform. And so some of our biggest customer opportunities have come through those type of dialogues where a company has bought some sensors or interested in sensors and doesn't know what to do behind the sensor. And so those hardware companies know about NVMe and AssetMinder, and they've been a great opportunity for us and have given us a lot of really great potential, great new customers for us. And so that's just accelerating over the past months to new opportunities, frankly, we didn't dream about even in October or November last year. With respect to geographic focus, we really, when I came in the business, we were very much focused on the UK and expanding into the Benelux and French region. Surprisingly, through reverse inquiry, even through our website and digital communications, we've gotten some larger industrial players that have come in, and through reverse inquiry and through some of these hardware companies have already started to expand our market of operations into Germany and even across to the United States. And so what we're doing is we're expanding our web capabilities, our digital capabilities, our social media content publishing into those markets, and hiring individuals, and about to make our first permanent hire in the United States. We already have a couple of part-time hires in the US, and then hooking up with key industrial players that are some of the top global companies that are going to be selling AssetMinder to their customers. So it's I think for us it's more about trying to focus on which channels to go with and trying to limit those channels, because today we're still a small team, but we're going to be expanding those employees during the year.
Excellent. Well, thanks very much for that, Peter. Joe, moving on to you. Had a number of questions. The first one was with an attendee this evening who was concerned about his privacy and how you actually collect data and what the protections are. And we all know that there is more and more focus on protecting people's personal data and how that might impact what you're trying to do.
Yeah, no, and I think that's a really, really important point, which is central to all that we're doing. So we completely respect people's privacy. The data that we collect is anonymized immediately. So we never collect data about Mrs. Smith who lives in a location. So there is no identifiable personal data. The data that we collect in an unstructured form, we want to collect data like gender, but we don't want to know who it is. So we don't in any way go near health records. We don't in any way take in data that makes it identifiable to an individual name. If for any reason we did get data, we've got a filtering right at the beginning to anonymize it. So we have no interest. We don't point our machines to personalize, and the output that pharma get in no way can be identified. So that's one part of the answer. The other, I mentioned a patient charter, and the reason we've been working on that is, to be fair, patients have to benefit. They benefit through better patient outcomes. So that's quite a long way along the journey. So how can we, one of our values is transparency. How can we be transparent at all points? So one of the ways is to bring patients into the equation. So bringing patients onto our advisory board and having a way to be transparent. So for example, working with patient groups for them to be able to access aspects of our data for good, to be able to share. And, for us, we know that patient groups, for example, really struggle with diversity and gender. So for us to be able to hone in our data to help them access more on gender and diversity will give back. So it's a really important part of our equation. And the most important part is it isn't personal data. It is aggregated, and it is always collected legally and ethically from people who, want to share aggregated data.
Okay. Certainly, thank you. That certainly answers that. The majority of the rest of the questions, and I'm conscious we've got limited time, have really been on what's happened since the launch of patient metrics in February.
Yep.
We announced this morning that you've secured your first customer, but can you give us a little bit more flavour about how the take-up's been, the interest you're seeing, and really how you see it going in the future?
Yeah, no, absolutely. And, you know, we very much took the investment with Tern and have worked with Tern on the milestones of accelerating our R&D and bringing it to a conclusion. And the conclusion is the launch of Patient Metrics. So we're delighted that, you know, during March, we've been able to go out and talk to customers. We have worked with customers throughout our development process because we want to put the customer at the center. So we have a number of clients who we are working with because they've been part of our development. So we haven't kind of locked ourselves away and then come out. So we're working with a number of partners. And yes, we have, you know, a signed contract because we are basically working on how to take that within pharma. So being able to take it, you know, into multiple subscriptions and create our patient confidence score as a real metric, a real way that pharma can work with it. So we believe that we've had a really good reception. We believe that now is the time. And, you know, the big pharma companies are certainly receptive to what we're offering. So, you know, we believe that that commercial rollout is on target.
Excellent. Well, that's very good to hear. We'll try and finish up in the next few minutes, and probably time to ask a few general questions and turn for Al and Sarah. But before I do, one comment that I get on a very regular basis, and I've had a few this evening from shareholders, is why we can't, why Tern can't announce more specific information on the portfolio companies, revenue performance, number of products sold, whatever it might be. And I don't know if any of the portfolio CEOs would like to comment on the importance of the commercial confidentiality in driving shareholder value. I think being close to the company, I understand what can and can't be said, and absolutely, as Gareth said in his presentation, why there are things that we would love to say, but we can't. But I don't know, it might be nice for some of the attendees to hear firsthand experience of the sort of confidentiality restrictions you're under with your clients. I don't know, Alistair, Peter, Joe, one of you or more would like to comment on that.
Yeah, I mean, I can certainly comment on Big Pharma. You know, we are absolutely under confidentiality clauses in terms of what we can and what we can't say, in that it's reciprocal. We will try to build into those agreements wherever we can case studies, testimonials, because they actually help the industry. The industry does actually work together. So it's in our interest and actually in the industry's interest to be able to publish those. But it is very difficult and it's very sensitive as we onboard customers. And, you know, we would lose a customer if we basically released too early or without approval. And, you know, some of those companies can be quite slow to approve, but we have to respect, you know, both sides of the equation.
Yeah, no, I completely understand that. Alistair, I don't know if you've got any comments to make.
Yeah, sure. I think we'll remember is that we will all sign up to confidentiality clauses in all these contracts. I think we've got to remember is that, you know, we are Wild. We're getting business because we're delivering something that's pretty out there, pretty unique, and delivers significant value to our customers. And they want to retain that value, and they want to retain that value for as long as possible. So there is that aspect of what the customer's views on maintaining his value, maintaining his competitiveness, and actually wishing, or not wishing, but demanding that we don't actually put out a lot of information that could potentially compromise their way forward. So we always have to really look at that side of it as well.
Yeah. No, thank you. I think that's very helpful. And finally, Peter, I don't know if you've got anything to say on that.
Yeah, I would just add that I think, you know, all of us in the portfolio companies want to communicate more out there. And I think that, you know, as Joe mentioned as well, we're all going to be coming out with, you know, where we can announce things. I know that we're working on some press releases right now that we're looking forward to making. And we're going to put that on social media. And I know we as a company at NBMA will be getting a lot more active, and we hope that that investors will follow us. And I think you'll learn a lot more over the next 12 months from us. So stay tuned.
Well, thank you, Peter. I think you make a very valid point there that I would reiterate to everybody here. You know, there are restrictions on what we can say as Tern, the number of announcements we can put out, but there are things happening every day with the portfolio companies. They're doing their own PR. So I would encourage you to follow them on social media, follow the press releases. We try and publicise as much as we can, but there is a lot of great stuff out there that you'll be able to see. Well, finally, to wrap up, Anal and Sarah, we mentioned in the AGM statement this morning, obviously the focus on driving shareholder value and how you work with the portfolio companies to take them to the next stage of development. I get a lot of questions on whether you're considering other options other than further investment and third-party syndicated private equity type investment. The public markets are open at the moment. Trade buyers are out there. I wonder if you could just give us a little bit more on actually the process and the thinking day to day that is, I know, going on, looking at all of these options and just reassuring people that you are looking at public markets if that's appropriate for a portfolio company, and every option that is available to generate value.
Let me start, and Sarah, fill in where you see value. I think it was mentioned early by Gareth. We have fortnightly meetings with the CEOs of the companies, and we use a traffic light system to measure the performance and plan to actual. The idea of this is what we're planning to do, and this is what we're actually accomplishing. And as a consequence, we're very in tune with the financial and business performance of each of the opportunities that we've invested in, which I think, if you saw what we're doing in today's presentations, they're exciting businesses with large opportunities. We're also spending time, like the meeting and presentations that we did with Liveroom to address institutional investors. And the idea of presenting the portfolio and presenting the Tern opportunity to institutional investors these are the folks who would be the cornerstones of any public offering or any sort of capability that might exist to generate a return on our investment that would provide a return to our shareholders. So we're actively in both the market, talking to folks that are cornerstones and interested in looking at the new young companies that have investable public market appeal. So we believe that is something that is continuous and ongoing. We're also sensitive to the idea that these are disruptive companies, and having them develop a number of critical cornerstone customers that in the SaaS world take time for those revenues to build, such that multiples of revenue, multiples of EBITDA can drive multiples on a public offering that we believe are important. So we have measurement criteria. We do analysis of the businesses. We use a number of the venture capital systems like the Rule of 40 to assess where we are with our businesses and their ability to raise funds in the various ways that funds can be raised. And also, besides the public markets, there are the M&A activity, the trade sale kinds of things, which are more lucrative in many ways because you're dealing with one cornerstone, and there's a lot of those ongoing discussions and partnership kinds of arrangements, such that, again, going back to fundamental, we were able to get Mayo Clinic and their investment arm, and Sana and their investment arm. And Sana is a hospital group, but it's owned by three of the biggest insurance companies in Germany. And they're looking at it from the insurance side as much as from the medical improvement side. So we're actively every month, having conversations with many potential exit opportunities, but also cognizant of the fact that with a fourth quarter exit ramp, with substantial increases in the SaaS revenues, some measurements of the churn on the customer base, et cetera, the multiples that we're seeing right now are handsome and going up. So we're carefully considering all the opportunities as they present themselves, but also looking at these opportunities with the idea that within 2 more quarters of performance, the multiple on revenue would generate a sizable difference in the multiple on enterprise value for the business. So it's something that we do, and Sarah leads the analytical part of how we do that with our businesses. Sarah, anything to add to that?
Yeah, I'd say Al's covered a lot of it, but there's probably 2 other points I'd make. One being that whenever we invest in a business, we do look and consider the possible exit routes at the point of investment. So the timescale can change, but in terms of the route to exit, that is a key part of our kind of investment assessment right at the very beginning when we first invest. And then timing is key. Timing is key, as Al touched upon. It's making sure you have those key marquee customers in place, that you have the right level of annual recurring revenue in place for in terms of driving value for these businesses. And in terms of that timing, it can therefore make a difference between, if you get a financial investor involved at an earlier stage, a strategic partner involved a little bit later on, or as Tim touched upon, ultimately also looking and considering for IPOs. We look at all those with the real focus on ensuring that we kind of maximise return for our shareholders when we do actually move towards an exit. Excellent.
Well, I think that's probably a good point to wrap it up. I'm very pleased. I'm trying to work out the maths in my head. I think we've only lost about 2% of people during the course of the last couple of hours. But thank you very much for all the panelists, everybody who's presented tonight. But most of all, thank you very much for everybody who's attended. I know we haven't managed to address every single question that's been asked. But anybody who has got further questions, please address them to me via Tern at investor-focus.co.uk. And as always, we'll endeavour to come back to you with answers. But I found it fascinating this evening, and hope everybody else has. So thank you very much, everybody, and enjoy the rest of your evenings.
Thank you, Tim, and thank you all for attending. We at Tern really appreciate your interest.
Thank you, everybody.